The vast majority of altcoins goes down over time, but there are a few outliers that tend to make multiple X returns. Returns are very much concentrated in just a few assets. And in the last month, one of those top performing assets was the Troll token. Troll is the leading trending meme coin on the Solana blockchain, or to be more specific, it's the leading trending token within the Pump.fun ecosystem, the launchpad of meme coins on Solana. Just have a look at this overview of Pump.fun ecosystem tokens. Troll is now the second largest, and it's pretty much the only token in the ecosystem that went up in the last 7 days. And so I tried to cover tokens early on this channel here. The first video on Troll was published 25 days ago. But unfortunately, that video did not outperform the average video on this channel. It actually did not get many views. The same is true for the follow-up video that's now 2 weeks old. The same is true for the most recent update. So for whatever reason, the attention on Troll is very, very low, yet the price performance is very nice. What's actually going on over here? Who is buying all of those Troll tokens? And the question is, how much longer can this really last? Does it still make sense to buy Troll right now? Here's, by the way, the price when that very first Troll video was published on this channel. We were at 3.7 cents. And here we are today at 23 cents. So if you want to be early next time, feel free to subscribe over here. I publish videos on various meme coins regularly on this channel. I also talk about the general macro environment as a whole. Now, Troll has been constantly growing. It's now the 4th largest trending token on the entire Solana chain. And that's measured by liquidity, as in there's a liquidity pool of 6 million of Troll on the chain. Here's when that first video was published. Since then, the price appreciated by more than 500%. And in the last 24 hours, we saw 2,700 wallets that interacted with the token on chain. The number of buyers and sellers was close to equal, yet the price went up. This gives us a first hint that the buyers tend to move more capital than the sellers do, which is not very common after a rally like this, right? Most of the time we enter with a fixed amount, and when this does a multiple X return, we might end up selling with a larger amount than what we bought for. Usually when we are rallying, the sellers tend to move more per transaction than the buyers do. Not so for Troll. Now, many people, in my opinion, approach crypto in the wrong way. Most people just look at the publicly easily available information. Most people follow the website, follow social media, and try to build an edge this way. Try to time the market better this way. But again, if we use the same information that everybody has, it's very hard to beat the market. What can we really get out of a website like this? There's really nothing that helps us time the bottoms or the tops better. There's not a lot of useful information on the Twitter profile, or now called X, either. It's all just marketing. It's nothing that really helps us getting ahead. So yes, if you want to kill your time, if you just want to get entertained, by all means have a look at all of those pretty pictures. But really, we are in this to make money, not just to get entertained. The Telegram channel is no different. It's all just noise. Really, what helps us get ahead is on-chain analytics. It's trying to find out who's buying and selling. And so let's have a look at those on-chain analytics. There's now 42,000 holders on-chain that hold some part of the Troll token. What we're seeing over here is the number of first-time traders and recurring traders per day in the last month. And what's interesting is that we saw quite a bit of momentum growth, quite a lot of attention growth up until the 5th or 6th of August. Since then, things tend to rather decline, but the price is not. Have a look at the trading volume over time. A lot of attention upon launch in April of this year, and then a resurgence starting at the end of July. The trading volume is split up by different wallet cohorts, but we can also normalize this to 100% per day. Then we get to this chart. We can see how over time there tends to be more and more of the trading volume done by the larger wallets and less by small retail. Again, a very similar hint to what we've already seen over here, how the buyers tend to move more capital than the sellers do. So potentially there are some big hands involved here. Now what we see over here is the number of retail investors on the the left, medium-sized investors in the middle, and whales on the right. So to be counted for the chart on the left, a wallet has to hold at least 5,000 Troll tokens. That's roughly $1,000 worth of the token. For the chart in the middle, it's 50,000 tokens, so a 10x. And for the chart on the right, another 10x, so 500,000 tokens. So it's equal to $1,000, $10,000, $100,000. We can see how the number of small retail investors is growing, and that growth tends to slow down as we're getting higher in the minimum holding threshold. But the rally really isn't driven by the small holder. Because really what's going on is described in this chart over here. The number of whales might not go up, but the token ownership by those whales definitely is. So the current whales are just accumulating more and more of the token. Have a look at how much of the supply is now held by the whales. So the wallets that have at least $100,000 worth of the token. This is currently at 72%, and it used to be at only 35%. This is a strong hint that the market makers and centralized exchanges are buying up the token secretly. Usually those purchases happen until we reach whale ownership of 90 to 95%. It doesn't seem like this is already finished. Right now, most of the trading volume still happens on the decentralized exchanges, but I think there's a very good chance that that's going to change extremely quickly. Yes, there are already perpetual futures. Maxi does offer Troll, but there's pretty much zero activity here. There's a very good chance that Troll could become the next fart coin. So the next Pump.fun ecosystem token that gets a lot of attention, a lot of short-term speculation through the perpetual futures, and this will be fueled by the centralized exchanges and by the market makers. But for that, the market cap has to first rise a bit further. How much further? Let's just make the comparison. So currently the market cap of Troll is at 224 million. Fartcoin is at 880 million. It has already come down quite a lot. The peak of Memecoin trading tends to happen somewhere at around 2 to maximum 5 billion. And this also happened with Fartcoin. At 2 billion, it turned around again and is currently slowing down. But again, Troll currently is only at around 200 million. If it really gets the adoption by the market makers and the centralized exchanges, and we do see those perpetual futures, then there's a very good chance that we are going to double, triple, potentially quadruple from here. On top of that, there's also the effect that the Troll price is directly connected with the Solana price, because it is getting traded versus Solana. So when Solana is going up by 10%, then automatically the US dollar price of Troll also goes up by 10%. And I think there's a good chance that Solana is going to outperform the rest of crypto in the near future. This is Solana dominance, and it tends to trade in a range. At least that's what it did in the last 2 years, roughly. And the potential risk is maybe an underperformance of 13%. The potential reward is an outperformance of 42%. So this comes on top of whatever Troll itself is doing. Now, some people call crypto just gambling, especially for the smaller meme coins, especially for altcoins. People say we're just throwing money at something, hope that it sticks, hope that it makes 100x returns. And while I do not believe that those massive returns are very realistic, I do think that crypto is not just a game of luck, but also of skill. It's a combination of both. And so the longer the game is played, the less important the luck component becomes and the more important the skill component becomes. It's a bit like with the edge in a casino, right? If you play roulette for long enough, then over time the casino will win because of that small edge, despite the luck component. And so I think it's very important to follow the right people in crypto. Follow the people that actually focus on the skill component. For example, I very much like Invest Answers. He does a lot of fundamental research. He's not always right, but he's trying his best. Or here, Memecoin. He also has some very interesting takes, especially on relative valuations. Ethereum relative to Bitcoin, altcoins relative to Ethereum, etc. It's very useful as well. Here, one of the OG Bitcoin investors, Anthony Pompliano. If you're not that much into active trading, but more into asset allocation, this is definitely a good channel to learn about the fundamentals and to learn about what's going on with the institutional investor side. It really doesn't take too much to figure out who's actually serious about the space and who's just trying to sell greed. The people that promise 10, 100, 1000x returns that always talk about those micro caps. They tend to just buy those small assets beforehand, then promote them on the channel, potentially even getting paid by those different projects, and then of course pump and dump on the audience, basically make money from the audience. I've never taken any money from any crypto project ever, and I will never do so. I get the offers all the time, but I always reject them. I just don't like the conflict of interest. I play the long game. I think when the community grows, even if it's a bit slower, but it grows steadily, then that's much better than promising to become filthy rich and getting 10x and turning $500 into $13,000. It's really not that complicated. If you find things like this, alts will make millions. This is your last warning to buy the effing alts. Or here, 2 100x AI altcoins with a Lambo in the background. Then it probably makes sense to be rather skeptical, right? Those people just want to make money off of greed. Okay, so let's say those 1000x returns are very unlikely going to happen. Let's say this happens only to a small minority, potentially to the insiders, not just to people that watch YouTube videos. What is actually then a realistic long-term return in a space like crypto? Because obviously we take on more risk by buying Bitcoin, by buying Ethereum, by buying the altcoins. We're taking on more risk. We should also expect more returns. But what's realistic? It's not 1000x. It's probably also not just 3, 4, 5% per year. Let's try to approximate this. So at least we should get back the monetary debasement, right? This is USM2, and this is going up by roughly 6.8% per annum. This is how much the US dollar debases over time. And who would have thought the S&P 500 goes up by roughly the same amount year over year? Yes, there is a lot of volatility, but have a look at this. S&P 500 divided by the money supply. That's the long-term chart. So this starts in 1959, and since that point in time to today, the S&P 500 outperformed monetary expansion by only 50%, so less than 1 percentage point per year. The vast majority of the stock price appreciation is just monetary debasement. So this is at least what we can expect with crypto returns. Getting the monetary debasement back. The same effect, by the way, holds true for gold. This is the gold price relative to the monetary base. So it's all going up by the same rate that dollars enter the system. But we are in crypto because this is a growth industry, right? More and more capital comes into the space now by an accelerating rate through Wall Street, through the ETFs and through the treasury companies. So let's try to figure out just with Bitcoin, so the least risky of the cryptocurrencies, what we can expect long term. And then of course, as we go into the more risk on stuff, we should at least beat that return. So here's the Bitcoin price long term. And of course, at the beginning, this tended to go up faster than it is today. This is a logarithmic scale, so we can see here the percentage changes. And what we have got in orange over here, that's the realized price. So this shows us the average cost basis of the market. The current price tends to hover around the realized price. So when we are currently below the realized price, it's a good time to buy. When we are above, it's not necessarily as good of a purchasing opportunity. But in general, the realized price tends to just go up over time. It goes up or it goes sideways. And so using the realized price, we can, at least to a degree, get rid of this volatility, right? Those 80, 90% drops in Bitcoin that make it so hard to predict how much Bitcoin long-term grows. Once we take that away and we just focus on the realized price, and let's say we use a conservative estimate, so we start off when the realized price went sideways for a prolonged period of time. Then we can compare the price over here with the price over here. We can see how quickly is this recently going up. And then we have an expected growth rate of the average cost basis of Bitcoin. How much should Bitcoin, if we ignore all the cycles, appreciate over the long term? So I'm dividing $52,000, that's the realized price today, by $20,000, that was the realized price 4 years ago. We get to a growth rate of 2.6, and then we put this to the power of 1/4. So this now annualizes this. It takes the geometric average over 4 years. So we get 27% growth per annum in Bitcoin. This is my best estimate for the Bitcoin price appreciation year over year if the market is not timed at all. If we don't buy the bottoms and sell the tops, if we just buy and hold and keep this running for the long term, 27% per annum is my expected long-term growth target for Bitcoin. 7% of that roughly is monetary debasement. The other 20% of that is just adoption, new investors entering the crypto space. Now, we are not necessarily happy with 27%, so we can of course time the market a bit, right? We can buy when there's money flowing into crypto. So this is the stablecoin market cap. It goes up since October of 2023, and we can avoid crypto when the space is rather shrinking and the stablecoin market cap is going down. This year was the Terra Luna collapse, and during that bear market we also saw FTX blowing up. Or we can time the market even more precisely using the realized price, right? As we already said, instead of using this as a long-term estimate for the growth rate, we can also use this as a market timing mechanism. We buy much more whenever the price is below, but in general we dollar cost average in. We just increase our exposure whenever the market is extremely depressed. But again, we are currently quite far away from that realized price. And it does not necessarily make sense to wait until we dip below, because sometimes we see a massive rally. This is when Bitcoin moved from $300 all the way to $20,000. So if you waited to hit the realized price when Bitcoin was at $500 and you missed out on a 40x return, that would have been not the best idea. So this gives us kind of like our minimum bar, right? If we buy and hold Bitcoin, we should expect at least 27% per annum. If we now trade actively, we should get more return like this. Now here's the difference of this channel to most other channels that you see on YouTube. Those people here, they don't share what they are making long term with their crypto investments. They're just pumping and dumping. But I'm willing to share my returns, and not just in US dollars, but actually relative to what I would have gotten had I just dollar cost averaged into Bitcoin. So this comes directly from my personal Excel sheet. It's monthly data. This is 4 years of data roughly. And had I just dollar cost average into BTC, I would have been over here, but instead I got this return over here. I 3x outperformed just buying and holding Bitcoin. And if we annualize this, right, we take this to the power of 1/4, we get to an alpha of 31% per annum, which then if you multiply this with the Bitcoin return brings us to a fiat return of 67% per annum. And so this is what I believe is realistic long term in this market. This is a growing market. We get above average returns because of that, but it's also an inefficient market. It's a market where there's a lot of mispricing. If we learn enough about certain mispricing patterns, like let's say certain pump and dumps that tend to deflate very long term, or let's say about tokenomics, where we see some altcoins underperform other altcoins very consistently. When we look at those pricing inefficiencies, we can have constant outperformance. I don't think it's all just luck. It's luck and skill. And so I don't stop just sharing my own trade performance. I actually started with something. 1.5 months ago, I started a capital pool here for the premium members. The pool has unfortunately already closed. We have hit the deposit limit, but this pool so far is growing pretty much at the rate that I would have expected. It's now at 78% APR. And so far, it only had a maximum drawdown of 2.6%. Now, of course, the volatility is likely going to increase over time, but still, this is the kind of performance that now the community members get just by parking their capital in that pool. And every trade that I execute gets executed in this capital pool as well. It's completely passive return. Now, I had to close the deposits for that capital pool because I first want to try this out. How does it actually work when more people invest? How does the platform work, etc.? So I keep this running until end of the year, but by beginning of next year, I will open another capital pool. Until then, I will of course continue to share my own trades. For example, over here on August 7th, I started entering a Pudgy Penguins short relative to Solana. And since then, Pengu underperformed Solana by 20%, which then led to a nice gain of 32K for the community. Of course, I get my share here as well, but the vast majority of those gains go directly to the members. And so really, instead of just hoping for the next 100x return, I think it's much better just to constantly compound the money. Because especially with those small meme coins, we can't really invest much, right? We can only invest maybe a few hundred or a few $1,000s, hope for the lottery ticket win, hope for the home run. But when it actually comes to real investing for thousands, tens of thousands, hundreds of thousands of dollars, we can't just bet this on a single rug pull. We have to go about this a bit more systematically. And so really, you only have to watch 2 videos to copy trade me. The first one is using perpetual futures on hyperliquid to bet on relative valuations. And the second video is risk management with relative valuation bets. Extremely important, because if you don't know how to manage your risk, this can end up not so nicely. You only get maximum drawdowns of 2.6% if you know how to properly manage your risk. But then once you've watched those videos, you can simply copy trade me. But I want to go one step further. Some of my trades, they tend to outperform so consistently that I'm actually okay with giving the following guarantee. Once you have joined the membership, the premium membership of this channel, you've watched those 2 videos and you've joined the community, then I will send you my favorite trade. If you do not make money with that favorite trade after 1 month of holding that trade, then I refund you the membership fee 100%, no questions asked. So you basically get access to this entire tutorial section 100% for free. And you can copy trade everything that I do. A strategy that's constantly making money with the community pool, and it has worked for me for the last 4 years. You get all of that for free if this very first trade that I'm going to send you after joining is not going to work out in the green for you. The membership is currently $125 per month. If you want to be the first people to access the next trading vault at the beginning of next year, then I very much recommend to join even the yearly membership. You can also switch to annual membership at any point in time, but the current copy trading pool has already been closed. Existing members, of course, will get early access before the 2026 pool closes. But again, that might be your next step if you don't want to risk an entire annual payment, which is now $1,250. Feel free to simply just test it out with $125. And again, this is pretty much risk-free since you will get my favorite trade. And if that doesn't work out, I will just refund you. I take that risk. A link to premium pops up on the screen directly over here. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.